And here we go. Welcome to the Brno Expat Centre. Today we have another webinar and we are talking about taxes again. My name is Jan. I'm the consultant of the Brno Expat Centre, and about 3 weeks ago we discussed how to apply for a tax domicile, a confirmation of tax residency. And the next week we'll talk about how to file your taxes, how to calculate your taxes if you are self-employed, having a business license. Today's topic is income tax for employees with income from employment and another income from some other activities. My name is Jan. I'm the senior consultant of the Expat Centre. I'm here today with Maruška, who is our tech wizard and editor, and Michal Hájek, who is following us online virtually. And Michal is a certified tax consultant, so he will be here if there are any questions at the end, any particular questions that I cannot answer because I'm not a tax consultant. This is not my profession. Let's get started about the income tax for employees. What we'll talk about today is how is your salary being taxed? If you have to do anything every year, or if you can do anything to cut your taxes, and maybe most importantly, if you have to file your taxes individually in case that you have an extra income. You should watch this if you are employed in the Czech Republic, in Brno specifically, and you have income from employment or other activities on top of your employment. But only if you are a businessman, self-employed. The webinar about taxes for you will be next week, the same time, online on our Facebook channel. How do you pay your taxes? So this is what you pay out of your gross salary. The gross salary is the sum of the money that you agree with your employer when you start your employment or every year renegotiate your salary. You as an employee pay 6.5 and 4.5%, so 11% together, to the Social Security and health insurance. This behaves like a tax, however it's called a contribution to the Social Security system or contribution to the public health insurance system. There is no way out of it and everybody pays the same. And this is done automatically by your employer on a monthly basis. What we are discussing today, however, it's income tax, what you pay to the Czech tax office, to the Czech government for the taxes that the government redistributes. The income tax for an individual income is 15%. However, there is a second range tax, and that is if your income in one single month is over 141,000, so this is 4 times the national average income. In that case, what is on top of that, what is over 141,000 is being taxed by 23% starting January this year. What was the model last year, and I don't want to confuse you more, stopped being true as of January the 1st. Until the end of December, your income tax was calculated not from the gross salary, but from your gross salary plus your employer's contributions. And your employer's contribution on top of your what you pay is 34% to the Social Security and health insurance. So if your gross salary is 100, your employer pays 34, you pay 11 and 15%. You can find online calculators that help you to calculate the net salary. We'll be sharing the link in our comments. This calculator is a commercial one. There are more. You can enter how much is your gross salary and it will calculate the net income, and you can even choose tax allowances and tax reliefs to see the final calculation. What can lower your taxes, so what can cut down your taxes, there are 2 ways. And it doesn't matter how is it called, but one of them reduces the the tax base before taxing, so your income is being reduced for tax allowances. These are some expenses that are recognized by the government, that if you do them before taxation. These tax allowances are charity gifts. You can donate to some organization, or even if you donate blood, one donation is considered 3,000. The charity gifts, they can be minimum 1,000 per donation, maximum 15% of the tax base. You can lower your tax base for mortgage interest up to 300,000. Mortgage interest for the mortgage that you pay for your accommodation in the Czech Republic, where you actually live, not for investment. And this is true only if you bought the property for your use and you started the mortgage until the end of this year. You can lower still the tax base for pension savings and life insurance contributions savings, as well as for education, trainings, and union membership fees. However, to be honest, I have still never met anyone paying union membership fees. So all these tax allowances reduces your tax base before you calculate the tax. We already spoke about how to calculate the tax. That's 15% or 23 over 141,000 in a single month. Now you calculate the tax, and from that tax you can get a discount. Every single person who is employed has tax discount for about 2,300 monthly, so 27,800 per year. And for all 12 months, even if you have not worked all 12 months, you can apply the tax relief for the month before you started to work. You can lower your taxes for the same amount of money for your husband or wife, your spouse, if they are economically inactive, so they did not pay their taxes and they did not take advantage of their tax allowance. You can apply it to your income. As well, tax allowance for children, it's different for the first child, second child, or the third, and more is the same, 24,000. In case you have disabilities, according to the level of disability, and for your tuition fees to a kindergarten, so for an institution that takes care of your children, up to 15,000 a year. And finally, a tax relief for students' studies. So if you study, not if you have a student at home, but if you study, up to 4,000 per year. So all these figures you see now on the slide are per year. Important here to say is that these tax reliefs are available to tax residents in the Czech Republic. So only to people who live here over 6 months in a calendar year. And I will get to the tax residency in a couple slides later. Now, what we have all discussed, I'm trying to represent on this funny diagram showing you what goes where in what order. So what you see on the top, so from your gross salary, your employer pays 25 plus 9%, so 34 to the Social Security and health insurance. But that does not bother you. This is not what you pay. From your gross salary, you pay 11% to the Social Security and health insurance. And from your gross salary, you first calculate your adjusted tax base. So what will be the tax paid from? What tops your gross salary can be some financial perks or non-financial perks. So like if your employer pays accommodation, or you use a car from your employer even for your private use. So these special benefits, financial or non-financial, tops your tax base and you are being taxed for them. Or on the other hand, you can lower the tax base for these tax allowances that we have just discussed, the charity gifts, pension savings, life insurance, mortgage interests. This is adjusted tax base. Now you calculate the income tax, so either 15% or 23%. And from the tax bill, you can get a discount, everybody up to 27,000 per year if you are everybody. If you have a spouse, for the same, up to the same money. For your children, 1, 2, 3 more kindergarten fees, and for your studies. And what is left is your net salary. So this is a complete picture of all the inputs and outputs with your gross salary. However, this is a complete picture. This is not happening every month with your employment, because what your employer can do every month is only to apply a personal tax relief, or maybe with the children, but nothing else. So this diagram, what you see now, is kind of like your monthly payslip. Your employer did not apply your tax allowances and did not apply tax reliefs for a spouse and for kindergarten and for the children if you didn't let them know at the beginning of the year. And that's why you can ask your employer once a year to recalculate your salary, to recalculate the taxes and get you some taxes back if you didn't get this tax discounts over the year. For this purpose, before I get how to get the tax discount, if this is your case and you only have gross salary, you don't have any tax allowances, no mortgage interests, no savings for pension in the Czech Republic, and you don't have a children, spouse, studies, kindergarten, that's it. It happened every month. You pay your income tax and it was lowered for the personal tax relief, 2,300 a month. And you don't do anything more and you are done. You are happy. You don't have to file your individual tax return. You don't have to ask your employer to recalculate anything because it happened on a monthly basis. So that should be the first case, and actually maybe most of you who are following us, and I do get every day some calls of some employees asking, so what do I have to do for my taxes? And I ask them, well, do you have a children or in the Czech Republic or spouse or mortgage interest? And they say, no, I just think I have to do something even if I just pay my taxes every month. No, you don't. If you are not asking for these extra tax allowances, tax reliefs, you don't do anything, you paid it all, your employer took care of it, and you don't have to sign or do anything extra. In the case that you think or you know that you should get these tax allowances and tax reliefs, after the end of the year, you ask your employer to do annual reconciliation. This is a tax return done by your employer. So you ask your employer to do it for you, and you have to do it before middle of February, so February 15th. And you submit to your employer the reasons why you want the tax relief or tax allowances and the proofs about it, like birth certificates of your children and a bill from the kindergarten and overview from your bank about mortgage interests. You give it all to the employer and they process with their payroll department and do annual reconciliation, and you will just get the taxes, if you are entitled, on your bank account after that. So it's the second case. You can apply, you don't have to, you can apply with your employer to do the annual reconciliation done by employer. However, now I will talk about the third group who cannot do it with employer and who have to file individual tax return done by you as a foreigner or Czech, doesn't matter. And this is the case when you have any extra income on top of the employment. So if you worked one employer and then you quit and started another employer, this is still considered one employment at one time and everything done automatically with employer. The last employer of the year does your reconciliation by employer. However, if one day it overlapped and you had two employments at the same time, and now this is the slide that speaks about extra taxable income. If you had a business and you are self-employed, you had a business license active, you issued invoices for products or services. If you had any capital gains, dividends, had a profit from selling a stock, you have to do individual tax return. If you rent out apartment, you leased your car, had profit from leasing a property, you have to do individual tax return. Or any other source of income. Somebody made income from a business, selling a business, win a lottery, or do some random help to different people or selling different products. If that sum of money is over 6,000 in a year, then it's not only small and occasional, you have to file individual tax returns. So all these extra incomes, if you have on top of employment or two employments at the same time, your employer cannot help you, and you have your personal responsibility to go to the financial office and report about your income and about your profit to the tax office and recalculate Social Security and health insurance. In this case, your employer will just issue one-page paper, which is overview of your income and taxes, Social Security, health insurance paid from employment. And this is just one input to that picture now with all the other sources of income. So now we have a different model when the salary, the gross salary, is just one source of income, and there are other taxable incomes: business, selling out product services, renting out, selling a stock, and you have to do this through recalculation to all the offices: financial office, Social Security, health insurance. This is not trivial, and most of the time you have to reach out to professional help, to accountant, tax advisor, who will do this with you. And important to say, this is if you have income anywhere in the world. It does not work the way that if you rent out apartment in Brazil or India or Austria and that the money stays there, that it's in that country and it does not concern Czech Republic. No. If you live in the Czech Republic, you are becoming Czech tax resident at latest after 6 months of living here. And you have to report here all the income worldwide. Even if it stays on your bank account, on your name in that country, it's your profit, your income. You have to report it here. Maybe not necessarily pay the tax again, because you might have paid it there, but you have to report it here. So this can get complicated. That's why you usually need a tax advisor to put it all together, fill out the forms that can get complicated. I do speak Czech and I don't understand the tax forms myself, and we cannot do it for you in the Brno Expat Centre, unfortunately. Okay, well, this brings me to the end. So this is the general principle. This is how it works. If you have any questions about what we have just discussed now, we are available for your questions. You can type in the comments on our Facebook channel as you are following us, or type any question about some particular cases of income tax of employees. And Michal Hayek, our tax expert, is now with us. I will put an ear plug in so I can hear him, and we can answer your questions. You can see the contacts on our slide. Okay. So do we have any questions? Gloria is asking, is maternity leave allowance seen as an income? So does she have to report it as a part of the income, taxable income? Maternity leave.
Can I speak?
Yes, Michal.
Okay, so the maternity leave is considered as an income from the perspective of the deductible item for spouse. So yes, maternity leave is an income in opposite to the parental leave, which is not considered as an income for application of tax relief for spouse.
Okay, so Gloria, just to repeat, we are talking about maternity leave. So this is usually the first 6 months, but after that it starts what's called parental leave. and this usually can go up to the 3 or even 4 years of age of the child. So if you ask about the first one, the maternity leave, then yes, it is considered as an income. It's actually like the sick leave from the work. Tibor is asking, what type of education can be deducted? I learned guitar with a private teacher.
No, it is not deductible. Generally, you can deduct just expenses for universities or high schools which are certified by Czech government.
Okay, Tibor. So guitar classes cannot lower your tax base. It's not a tax relief. It has to be professional education, something that you use for your employment or for your work, for your business. And another question, Benny. Will I get a refund of tax when I leave Czech Republic and move to another country? I used to work in the United Kingdom, and when I left the country, they gave me some amount of my tax. Is it the same possible in the Czech Republic?
Generally, you can ask for the tax refund from the Czech government, because you are always entitled to the whole annual tax refund, personal tax refund, which is currently around 30,000 Czech crown. But concerning to your claim, it is a little bit more complex, because there is necessary to specify your tax residency, and there is necessary to specify if you changed your tax residence during the year. Yes, but generally you are entitled to the personal tax relief, and to file your tax return in the year of change can be very advantageous for you.
Okay, so Benny, in other words, you get some tax back only for the month that you did not work. So if you leave in the middle of the year, there is 6 months of this tax relief per person left that you can then get back after the end of the year. But if you work the full year until the end, there's no tax to get back. Jagoyas is asking, during 2020 I had 7 months accommodation contract. Is it going to be enough to submit my documents as a Czech tax resident? So somebody living here 7 months can apply for tax reliefs, tax allowances as Czech tax resident?
Okay, so the specification of tax residency is not so simple. Jan mentioned here the specification just according Czech tax law, but the Czech Republic has concluded a lot of mutual double taxation avoidance contracts with the other particular countries, and in the contracts the specification of tax residency is defined in different way. So I would recommend to everybody, because currently we are not able to sort out the country of origin of the particular people, so I would recommend you to find out if Czech Republic has concluded double taxation contract with the original country, and then we can specify the tax residency according to the contract. Yeah. So the first criterion in the contracts is mostly a flat. So if you have flat just in one country, then you are tax resident of the particular country. The second criterion, if you have flat in both countries, then you have to go to the second criterion, which is center of your vital interests. So we consider here if you live in our country with your wife, with your children, or if you are single, then we sort out your center of vital interest from the property point of view, from cultural interests point of view, and so on. And the third criterion is the length of your stay. So very often it can happen that you will live in our country for a whole year and you will never become a tax resident of the Czech Republic. And there is also possible that you will live here less than 6 months, and for some part of year you will be considered as a Czech tax resident. Yeah, so we consider every case separately, and you have to use the criterion or the criteria in the mutual double taxation treaty.
Okay, so the question about the tax residency really can get complicated, and many personal questions have to be cleared first. Tibor is asking, if I ask my employer to do annual reconciliation for kids' kindergarten, do I need tax domicile, or my employer can do it for me without domicile?
It's a good question. Generally, it depends on your employer. If your employer doesn't have any doubts about your tax residency, then your employer can make the tax reconciliation for you. Otherwise, you will have to file your personal tax return. Or you can ask tax office for certificate of tax domicile, bring it to your employer, and then your employer will make the tax reconciliation for you. So you should use which way is more comfortable for you. If it is to provide an evidence of your tax residency to your employer, or to make your personal tax return yourself.
Okay, so the tax domicile is not a legal requirement to do the annual reconciliation.
Yes, it's correct.
Ellie is asking, and there is always some question about capital gains. I have investment in my home country and I earned capital gains there and it is already taxed there. Do I still need to declare here in the Czech Republic? As I understood, everything that I earned through capital gains, dividends or stock, even if it's from another country, has to be reported in the Czech Republic.
Okay. I would like to split dividends from capital gains. Concerning to dividends, very often dividends are taxed in the original country, but the dividends shall be declared also in country of your tax residency. If it is Czech Republic, then you should declare here in our country your dividends, and after that, according to the mutual double taxation treaty, we will sort out how to avoid the double taxation of the dividends. Mostly the method is set off the tax which was paid in the original country against the tax which is calculated here in our country. But the dividends shall be always declared here in our country. Concerning to capital gains or generally profit income from trading with securities, the trading shouldn't be taxed in the original country. In most of the countries is applied that the capital gains shall be taxed just in country of tax residency. So if your country of tax residency is the Czech Republic, you should declare your trading here in our country according to our rules and tax it here in Czech Republic. If to be honest, I can't imagine that the profit from trading can be taxed by some withholding tax or something like that. So mostly the trading is not taxed in the country of origin.
Okay, thank you. Jayoma is asking again, if I didn't work 1 month last year, am I qualified for tax refund? Yes, if 1 month you didn't get the tax discount per taxpayer, this last year was about 2,000 per month, you can get these 2,000 back. However, if you have to do some paperwork because of that and maybe even pay some accountant services, it might not be worth it.
Yeah, it's correct. Everybody is entitled to whole annual tax relief, personal tax relief, without any other conditions.
Yeah, thank you. Linda, you mentioned some percentage contribution to pension. If an expat leaves the country, will the person get access to the pension fund when the person retires? Maybe let me answer this. We have to make difference between the public social security system and a private pension savings. Whatever you pay to the public pension system as part of your social security contributions, you never see it back as a cash money. It's not that you are saving to your account. This is supporting the elderly pensioners today. So if you move out of the country, it's not last, because if you retire in a country that have agreement with the Czech Republic, so in the Czech Republic or anywhere in European Union or any country that has agreement with the Czech Republic, your time that you contributed to the public system counts towards the overall time needed for the being entitled for the pension. So yes, and the Czech Republic contributes after, when you retire, part of your pension. When we spoke about tax allowance for the pension savings, this is only for private pension savings that you do voluntarily from your income, and only to the pension savings in the Czech Republic. So you would have to retire in the Czech Republic to get advantage of this. So if you don't know if you retire in the Czech Republic, then the private pension savings, it's not the best way for retirement. I don't know, Michal, if you want to add anything to that.
No, it's correct.
Do I also need to report capital gains if they are below threshold of, I believe, 100,000? Or do I need to declare those gains? Tom is asking.
Okay, Tom. You don't have to declare your income from trading if your income doesn't exceed 100,000 Czech crown. But we are talking not about your profit. We are talking about income. So it means, in other words, if you sell your stocks for less than 100,000 Czech crown per year, per calendar year, then you don't have to declare it in your tax return. It means also, in other words, that this amount is exempted from taxation.
Okay, thank you. And maybe a last question. Carlos is asking, the amount of money for tax relief are static? Doesn't it depend on how much taxes I pay? I mean, the amount of money for tax relief is the same for a person that earns 30,000 and another who earns 80,000?
Yeah, it is correct. The tax relief is the same for everybody.
Yeah, so the tax relief is the same. So it's the same money that you can save on your income. It's not a percentage. I think we went through all the questions. So shoot now or remain silent forever. No, you can of course contact me or contact Michal anytime after this, best via email or on the Expat Center contact form, and we will answer your question individually after this session is over. The video recording will be available on our Facebook channel, facebook.com/brnoexpatcentre/live.
One more question.
And Mari is saying we have one more tech question. Anna is asking, is tax residency somehow affecting pension after retirement? I'm not sure if I understand the question. Michal?
Your tax residency doesn't have any influence on the payments of your pension, but your tax residency could have influence for taxation of your pension. Yeah, it is quite a complicated question, and it is mostly sorted out in the mutual double taxation treaties, where it depends on the fact if your pension will be taxed in country of origin, in country which pay out the pension, or if your pension will be taxed in country where you are tax resident. And unfortunately, it is very various, and with each country are valid different rules for the way of taxation. So I would recommend you to look at the mutual double taxation treaty and sort out where the pension will be taxed. But for the fact that the pension will pay out to you, tax residency has no influence.
Okay, thank you, Michal. Thank you for all the questions. Thank you, Maruška, for doing the technical stuff. And we'll get back to you next week with the webinar about the taxation for self-employed.
And I would also like to thank Hansa, who managed to present all of this whilst hearing himself in his headphones with a 2 seconds delay. So well done.
Thank you, Michal, and have a good evening all.
Thank you too. Bye-bye to all.